Good afternoon, this is Clayton Ream with Van On & Company with your afternoon grain and livestock marketing update for September 2nd. Well, it was the middle of the week here and we got export sales in the morning. It was kind of a bear day to get go off of for the grains as we traded lower overnight and kind of held that throughout the day, but the late day strength in the outside markets and specifically the energy markets helped spark a little bit of a buying influence, and the expectations that export demand and sales report tomorrow morning is going to be fairly supportive into the end of the day. So grains did manage to finish slightly off their lows. Nothing really in the green, but in this type of market, I guess a little anything off the lows is a positive as we search for a near-term low for the grain markets. The key focus moving forward is going to be the September 11th crop report. That's going to be a supply and demand report. We're getting private estimates out for yield. They are slightly below USDA's current estimates that they released in the August. That may be another reason for the small buying program that we did see late in the day today. So it really is dependent on tomorrow and how we close out the week to see if we're forming a rounding bottom or if there's the potential for another leg lower in these markets. Harvest is starting to pick up pace. It sounds like yields are running, kind of whole-ha depending on where you're at, but not necessarily anything off of last year's record pace. So even if we do print these yield numbers that USDA has and some of these estimates, keep a note that it will be the second largest crop or yields that we've ever had in history outside of last year. And it's going to be really important for demand to continue to uptick and be strong here as we move forward to keep these prices from going too much below break evens. In the livestock markets, kind of another volatile day. We actually had the hog market hold strong strength throughout the day and firm as we worked through it. The cattle market was actually weaker for most of the day, but spark a little bit of cash trade around that 142 to 144 was enough to kind of give the market a little bit of lift along with the Dow. So most importantly, as of lately though, touching on the outside markets has been the crude oil and the stock markets, and the volatility continues to be wild out there. We had an EPA report this morning that showed a pretty decent build in crude energy stocks, but a small decline in unleaded RBOB stocks, so that was a little bit supportive. And as we worked through the day here, that sharply lower market did manage to come back to trade actually kind of sharply higher, with crude up nearly $1 and the byproducts up nearly 3 cents. So that market seems to be having a bottom. We're starting to hear about OPEC working on regulating some prices here to help soften the blow that they've had to deal with here for the last year. So there is potential that the commodities could have some influential buying off of that moving forward. So as always, trading futures and options provides risk and loss and is not suitable for all producers. Have a good day.